Hey everyone, welcome back to Corporate Decoder. Today, S.W.M.R Inc. S.W.M.R just filed a current report and I'm seeing some mixed signals that matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company announced their first quarter results, and it seems like things are not going as smoothly as they might hope. This filing of Form 8K is basically a way for companies to tell us about big events that happen between their regular financial reports. In this case, S.W.M.R Inc. is sharing their financial results for the first quarter, which ended on the 31st of March of 2026. Now, S.W.M.R Inc. ticker S.W.M.R is a technology company that works with software, specifically in the infrastructure part of the technology world. They have a market cap of around $374 million and about 49 employees. The most important part of this filing is the announcement of their financial results. According to the news, they had a loss in the first quarter. One headline even says, drone software powering 100,000 Ukraine missions reports Q1 loss. This suggests that while their technology is being used in significant ways, the financial reality is a bit tougher. They've attached a press release with these results, and this is where we get a bit more detail. While the filing itself is brief, that press release is key. We're looking at a company that seems to be operating, making important connections like a $2.86 million contract with Meta Bureau for drone software licenses, but the bottom line is showing a loss. This is a classic case of revenue being generated, but not enough to cover the costs. It is worth noting S.W.M.R Inc. is identified as an emerging growth company. This means they have a bit more flexibility with certain financial reporting rules. They have also elected not to use the extended transition period for complying with new or revised financial accounting standards. This means they are on the hook for newer accounting standards sooner rather than later, which can sometimes add complexity. Their common stock is traded on the Nasdaq Stock Market LLC under the ticker S.W.M.R. When we look at companies like this, especially those in a rapidly evolving sector like drone software, we always want to see growth in revenue paired with a path towards profitability. What we are seeing here is revenue generation, indicated by the Meta contract, but this is being overshadowed by losses. This is a concern because profitability is what ultimately sustains a business and can lead to shareholder value. This situation reminds me a bit of some of the smaller tech companies that, while having innovative products, struggle to translate that innovation into consistent profits. It's a tough balance to strike. Investors are always looking for that balance between exciting growth potential and a solid, sustainable financial performance. What I am actually looking for is consistent revenue growth alongside a clear strategy to become profitable. The fact that they are securing contracts is positive, showing demand for their services, but the underlying losses are a significant hurdle. Oh, and the research tools I actually use are linked in the description. They help keep this channel going, that is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check the Discord in description.